Money FM 89.3, the best of the afternoon update. The Afternoon Update with Lin Li Fu.
Welcome to Industry Insight on Money FM 89.3, where we speak to business leaders and subject matter experts shaping the future of industries. I'm Lin Li. Fraud has always been part of finance, but with artificial intelligence, scams and deepfakes are now spreading at machine speed, eroding consumer confidence in banks and financial institutions. And without trust, digital finance simply cannot function. Today's conversation is the first of a two-part special on deepfakes and AI-driven fraud. In part one, we'll explore the systemic risks and industry-wide response. And then in part two, we'll be turning to the technology being developed to secure identity against these threats. Joining me for part one is Christophe Barel, Managing Director for Asia Pacific at the Financial Services Information Sharing and Analysis Center, or FS-ISAC, the global consortium that enables financial institutions worldwide to share threat intelligence and collaborate against cybercrime. Christophe, welcome.
Thank you so much. It's great to be here.
Now, let's start with the big picture. How has AI changed the way scams are carried out? And what makes these threats different from the fraud we've seen in the past?
Sure. Threat actors are now using large language models, right, to increase the volume and sophistication of their attacks. LLMs are basically a type of AI that generates human language. Recently, IBM reported that 16% of breaches involved attackers using AI tools, and most of the time for phishing or deepfake impersonation attacks. The use of AI clearly lowers barriers to entry. Typically, GenAI reduces the time needed to write a convincing phishing email. It used to take, 16 hours before. Now it would take 5 minutes. So that's a real game changer. And we know that threat actors can leverage known vulnerabilities and literally any opportunity more rapidly than ever before. Phishing content is becoming more convincing and actually harder to detect. Those LLM-generated phishing emails or even messages have a significantly higher click-through rate compared to the old human-written phishing messages. And now, if we zoom in on deepfake, to your question, threat actors are using AI-driven deepfake to execute more C-suite impersonations and social engineering scams. What we call AI-driven identity fraud, which basically includes deepfakes and synthetic identities, more than doubled in recent years, including in Singapore, actually, where financial services are heavily targeted, and that's the sector I focus on at FS-ISAC. And deepfake technologies are easily accessible now and inexpensive, which means that low-skilled threat actors are now more equipped to achieve, large-scale theft, adapt quickly, and maintain longer dwell times without detection. Unfortunately, we expect to see that impersonation attacks will continue to increase over the coming months and probably well into 2026.
Christophe, it's really scary, especially when it takes only one convincing message or call to trick someone. And nowadays, like you mentioned, it only takes minutes for them to come up with these scams. It just feels like the volume of these attacks has exploded in such a short span.
Yes, that's right. We started to see that trend, I would say, 2-3 years ago, and now it's literally ridiculous. If we talk about fintech fraud in APAC, more than doubled, driven by AI-powered deepfakes, with Singapore alone seeing a 1,500% spike from 2024 in deepfake-related cases, and I think Hong Kong is even higher at 2,000%. And consumers may unfortunately begin to distrust even legitimate digital interactions when financial institutions fail to protect customer data or assets. Customers lose confidence in their bank's ability to, safeguard their interest or assets. So that's the real risk, that when trust as the cornerstone of financial services is basically compromised here because it's more valuable than ever now in the age of digital. And just another study here, which was done by Accenture, it shows that 62% of customers lose confidence in their bank after a breach. And 43%, which is still high, choose to stop engaging altogether. But thankfully, with robust systems and strong security can help reassure customers and strengthen long-term confidence.
I was just about to talk to you about that. Many in the industry say that trust is really the foundation of financial services. If people don't believe the system is secure, it really doesn't matter how advanced the technology is. So, in a way, AI fraud is a direct threat to that trust?
Yes, definitely. And again, because trust is the bedrock of finance, right? Mm-hmm. And so that's clearly more and more important. So that's clearly the trend we're seeing, and that's indeed scary.
Okay. And you've called for a shift in mindset, moving from defense to deterrence. What does that mean for banks and financial institutions?
On one hand, AI drives innovation and efficiency for financial sector, for financial firms, while on the other, it introduces new risks that must be carefully managed. If we look at the former for a minute, in the Philippines, a digital bank has incorporated a ChatGPT into its operation to enhance service quality while managing operational costs effectively. And the tech now handles 90% of customer queries and it's also capable of resolving 75% of these without any human intervention. That's really impressive. Now, I'd like to add that cyber resilience is essential to anticipating and deterring cyber threats, including fraud. So cyber resilience is basically an organization's ability to bounce back from cyber threats. It's not just about preventing attacks, right? That's more, also about being prepared to detect, to respond to, and recover from them effectively. And, financial institutions expand their digital operations across online and mobile platforms. We see that more and more. And therefore, their exposure to cyber threats grows significantly. As a result, and their customers, so us, are prime targets for financially motivated cyber criminals. And to safeguard consumer confidence, I would say firms must really, really invest in rigorous cybersecurity measures while also encouraging strong personal cyber hygiene practices. Now, the question is, how do you build cyber resilience? I mean, that's a key word.
That's right.
We're hearing quite a lot for the past couple of years, I would say. And first and foremost, I'd like to stress the importance of basic cyber hygiene, as I mentioned earlier, and getting the fundamentals right. Good cyber hygiene doesn't just protect sensitive data and ensure operational resilience, but also helps preserve customer trust. It helps firms at any level of cyber maturity stay secure, but also compliant and resilient against evolving threats. Another key element to take into consideration when building cyber resilience is the importance of intelligence and information sharing, which is basically our bread and butter at FS-ISAC. And that helps organizations with the knowledge to anticipate and participate, mitigate threats before they actually escalate or happen. And the last brick towards building cyber resilience is breaking down silos that slow down collaboration. AI accelerates the speed and complexity of attacks. So as a result, I think cross-functional coordination becomes even more critical. And we have published cyber fraud prevention framework that anyone can check online. And that's an example of how firms can break down silos by reinforcing collaboration between different teams within banks, for example, right? Cybersecurity, fraud, financial crime, money laundering teams should really work closely together.
Okay, so it's about being ahead of the curve and not constantly playing catch up, I suppose. Right. Now, let's talk about the ripple effects. How can one bank's weakness turn into a wider problem for the whole financial system?
Sure. So, let me share a scenario here, for example. So, imagine a young professional who regularly uses a digital wallet to pay for daily expenses like, groceries, transport, online shopping, and so on and so forth. One day, the news reports that the wallet provider has been hacked and millions of users' personal and payment details have been compromised. Even if her own account isn't directly misused. She really worries about fraud on her linked credit card. She has to reset passwords and replace payment methods. Her friends and colleagues hear the same news. Some stop using mobile payments altogether out of fear, preferring, going back to cash or delaying online purchases.
I see.
Merchants notice a dip in digital transactions, and banks brace for higher fraud claims and customer support requests. So my point is, what began as a breach, at a single company quickly undermines confidence, trust in digital finance more broadly, making people reconsider whether their money and data are actually truly safe online.
Almost like a contagion, I think. One case of fraud could actually undermine confidence across the board.
That's right.
And I think this is where FS-ISAC, which stands for Financial Services Information Sharing and Analysis Center, if I'm not mistaken, this is where you guys come in. Can you share how your consortium helps institutions defend themselves collectively rather than in isolation?
Yeah, sure. I mean, that's right. FS-ISAC is exactly that. It's a member-driven, not-for-profit organization that advances cybersecurity and resilience in the global financial system. We focus on threat intelligence and best practice sharing. We organize events, we run exercises, we publish white papers to equip our members so that they can protect and defend against cross-border threats. Our members represent basically 5,200 member firms globally in 75 countries. And we are present in Singapore, also Australia, Japan, and India, as far as Asia is concerned. So what we do is we keep encouraging our members from financial firms to tap into the collective knowledge. That's really important, right? And with emphasis on collective that we have built since 1999, in fact, basically for 26 years out of the US, since 2016, 17 out of Singapore. Trust, again, is key. We are a trusted community for information and intelligence sharing in the financial sector. A community of communities bringing members together on shared subscribers, interests, geographies. For example, we have a fraud intel community, an AI risk working group, post-quantum computing working group. We have third-party risk management working group, etc., etc. We issue best practice guidance for the sector. For example, our FS-ISAC AI risk working group published a series of 6 white papers on AI threats, risks, and responsible use cases, including building AI into cyber defenses and responsible AI principles. And we also, again, focus on cyber exercises, typically on incident response, that foster collaboration.
Okay. Christophe, just out of curiosity, do you also run crisis simulations and perhaps from there provide best practice frameworks?
Yes, we work around those areas as well, whether it's directly or with partners of FS-ISAC, yes.
Okay. All right. Looking ahead, what should financial institutions in Asia prioritize over the next 3 to 5 years if they want to stay resilient?
It's a great question. Financial institutions need to stay ahead of the curve, say, with new and emerging technologies such as Gen AI or quantum computing. I think we need to do a full session on quantum computing because it's such a complex topic, extremely interesting in the context of cyber security. And, the rapid digital adoption and the prevalence of sophisticated AI-powered criminal networks globally have pushed financial institutions in APAC to invest in advanced fraud prevention technologies. Based on research by NICE Actimize, more than half of the organizations surveyed in 2024 responded that they have invested in advanced analytics or machine learning tools to enable real-time fraud detection. Financial firms in APAC are taking a proactive approach, which is great, and are already employing AI technology to combat fraud. For example, it's quite common to see banks here use AI for real-time transaction screening or for anomaly detection and for behavioral pattern analysis to detect fraud and unauthorized activities. I think a security by design approach is key here. It's about integrating security measures at the inception of the processes, software, and systems. Another priority is cross-border and cross-industry collaboration, as I mentioned earlier, because no single institution can anticipate every threat at all times. Borderless and timely intel sharing helps firms protect against threats that start in one place and migrate elsewhere. And APAC financial firms are increasingly embracing information sharing. More than a quarter, in fact, say that their anti-fraud and AML teams collaborate closely. Internal sharing is a good first step, and we help with external sharing as much as we can. And lastly, preparation is essential to increase the sector's operational resilience. It's impossible to completely prevent all cyber incidents. So training, exercises, playbooks, and sharing defense strategies are some of the most effective ways to identify and close gaps, strengthen internal defenses for better operational resilience.
Wow, sounds like it's all about creating a financial ecosystem where people can still feel confident walking through the door.
That's the goal, yes.
All right, thank you very much, Christophe.
Thank you, Lenny. I appreciate it.
And he is Christophe Barel, Managing Director for Asia Pacific at the Financial Services Information Sharing and Analysis Center, or FS-ISAC, on why AI-enabled fraud poses a systemic risk and why the industry must shift from defense to deterrence to protect the trust that underpins digital finance. Thank you very much, Christophe.
Thank you, Lenny.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.